So this week we're continuing to build our knowledge of terminology, and we're also going to be working on a couple of fairly straightforward calculations that would be seen on an income statement or a budgeted income statement. So we're going to talk about gross profit and operating profit briefly. So if we look at a simplified income statement for a merchandising or manufacturing company, it looks like this. We've got our sales revenue, so whatever we're selling, minus our cost of goods sold, so the cost of making whatever product we're selling, and that's our gross profit. So that's important to remember. Your gross profit is your sales revenue minus the actual direct labor, direct materials, manufacturing overhead, those direct costs to actually make it. And then after you subtract out your operating expenses, you're left with your operating profit. You will see this also referred to as operating income. And you'll also see gross profit referred to as gross margin. So gross margin or gross profit can be used either way. And then operating profit or operating income can also be used. If we look at our service income statement, that's quite a bit simpler because we don't have this cost of goods sold. We're not making a product, we're just selling a service. So if a service income statement is just simply your service revenue minus your operating expenses equals your operating profit. So let's look at a sample here. In the sample exercise, we have a company that manufactures kitchen equipment, and for the year ending 2021, these are their revenue and expenses. Their sales revenue is $985,000, their cost of goods sold is $489,000, and their operating expenses are $245,000. So how would we calculate a simple income statement based on this information? This is how we calculate it. We take our sales of $985,000, subtract out our cost of goods sold. Again, these are all the costs involved with making the product that we sold. And then we're left with the gross profit or gross margin of $496,000. Then we subtract out our operating expenses, so general admin, accounting, your HR. Subtract that out, $245,000, and that leaves us with an operating income or operating profit of $251,000. So that's how you calculate gross profit and operating profit or operating income. There is one thing to note. The textbook in a couple places calls this net income, and net income is not technically the same as operating income. Net income actually is after we get to our operating income, then we subtract out things like interest and taxes and other income, and that actually gets us our net income. So a little bit of a technicality, but just something to keep in mind.